Hey everyone, and thanks for joining me on this new Watchlist Wednesday. My name's Matt, and if you're a nerd like me, you've probably noticed that in the past few weeks there's just been a ton of exciting information that's come out to the market. Disney opened up a park, Pepsi started an e-commerce store, Elon Musk tweeted that their stock price is too high, Warren Buffett's sitting on a lot of cash. We had the longest streak of growth in the market this year. Elon Musk was on Joe Rogan, Killer Bees. Elon Musk reopened the Tesla factory and is not afraid of getting arrested, even though he just had a child this week as well. I guess the markets have been crazy, as well as Elon Musk. Maybe nothing new there, but definitely an interesting week. So with all that said, it was really hard to make a decision here for this week, but I have a calendar to kind of keep myself organized. And, unless I get a suggestion from somebody, then by Friday of the following or the Watchlist Wednesday, I commit to the stock so I could start my research. And so for this week, we are going to be taking a look at Shopify. So full disclosure, Shopify is a company that I've owned in the past. I have sold out of it, so it's no longer something I personally own in my portfolio. Really wish I didn't sell out of it, but that's why we're kind of taking a look at it again today and seeing if it's something maybe worth re-adding to the portfolio for myself or even just adding it to our watchlist portfolio. Shopify is the first Canadian company that we're taking a look at, so that's interesting. I don't really think that's going to play a huge factor in Shopify's performance, if it was based in the US or Canada, but it's cool that we're looking at a Canada company this week. And I'm also a really big fan of the CEO. Toby Luki, I'm not sure how to say his last name, but I think he's a great CEO and has the right vision for where Shopify needs to go. He's incredibly smart. He taught himself all the engineering for creating Shopify. He's a really humble person. I saw in an interview somebody asked him what it's like to be a billionaire, and he truly wasn't fazed by it. He's like, it's not something I ever set out to be. I just wanted to set out to start a really good company and help other people. So I always enjoy CEOs and co-founders that are set on the vision of the company rather than set out on becoming a billionaire. And I really think that goes to show with a company like Shopify just how well they've been able to perform. He also understands that for Shopify to do well, their businesses underneath their platform need to do well. So what he did is kind of during this pandemic that we're in, is he actually took $242 million, give or take, of Shopify's own money and is loaning that out to the small businesses that are on Shopify to help support them during these times. Understanding, again, if one of these companies goes out of business or if any of them do start to go out of business because of the lack of resources and support, that's going to negatively impact Shopify. So yes, while it hurts their bottom line temporarily, I think it's a great long-term strategy. Clearly shows that they're focused on their consumers, as well as it's going to be a way for them to make money from this, because once those loans get paid back, there will be interest. I didn't see any talk about what those interest rates are, but it will be something or just another source of them for making money. The one hard part about reviewing a company like Shopify, doing an analysis of them, is they're still not profitable. So we're going to have to kind of take more of a look at this like we did with Peloton and just understand the CEO, the vision of the company, listen to their earnings calls, take a look at what the competition's like out there, but really we're going to focus on what's driving this company forward. As well as we can take a look at their balance sheets or income statements or cash flow statements, because those are the numbers we have right now. We don't have like PE ratios, they don't pay a dividend, so really we're just going to see if we can find a qualitative aspect of this company that would make it worth the investment. The other thing that makes it really hard to review a company like Shopify is that the stock price is so high. It's just, to me, it's really high. It might not deserve to be that high, but we'll get into that a little bit later and see if we think it's an appropriate price to pay. So maybe I should have started with this a little bit earlier, but if you're not familiar with Shopify, it's a website for users to go to and create their own e-commerce store. So they, if you're selling anything from socks to paintings to anything you can sell online, it's a really easy drag and drop setup for you to create a store. And it started because the co-founder, CEO Toby, wanted to sell snowboards online. He moved to Canada, fell in love with snowboarding as a hobby, and wanted to open up a store and wanted to make those sales online because he realized that's where the best opportunity is, but just said it's so hard to create an online store and figured there has to be a solution out there for this. So he created Shopify, pivoted away from the snowboard company, and again, now we have Shopify. Currently, they have over 500,000 active users on the platform. I think there's around 800,000 stores, but not all of them are active, either due to just people not having interest or only taking advantage of free trial periods. So 500,000 active stores is definitely a large number of people that are using this platform for their own businesses. Shopify also not only creates jobs for those that set up these e-commerce stores, but they also work directly with people that create apps for easy plugins for Shopify stores, as well as people that create templates or design layouts for other people's stores. So they're not just in one area of business for helping other people start a business. They're really very well rounded in that aspect and have multiple ways that they're creating jobs for people. So this might be a little repetitive of a section here, but there's multiple ways that Shopify makes money. They make money through their subscription services, which is at different levels. I'll try to pop up a little image so you can kind of see what that looks like. They also make a transaction fee for selling products through their platform. They have a few free templates that you can use for your storefront, or if you wanted to separate yourself from everybody else, they do have paid ones as well, which is another way for them to make money. They also make a percentage from the apps that you can plug into your store. So an example of that would be like they use MailChimp, which is an email service that you can put into your store. They have apps that you can include that's a customer service line, ShipStation for shipping packages and printing labels. So those businesses charge the user, and then they end up paying a portion of that to Shopify as an additional source of money towards Shopify. And they also recently came out with point of sale systems. So think if you go to like a brewery or a food truck and they have those things that you swipe your card, plugs into like their phone or something, that's a point of sale system, and they just started their own. Really, I think the purpose there was to help people that, make crafts or something like that, and going to the farmers markets to sell. They can now link up their Shopify system to their point of sale system and really keep everything together, which helps if you're trying to understand data and look at analytics, sales, taxes, all that stuff. Now, they do have some competition. The competition that I saw mostly, and there is more, but I didn't want to make this really long video. The biggest ones to me, or that I feel are the biggest ones, is Wix, Squarespace, WordPress, and surprisingly Square. Now, the first three, Wix, WordPress, and Squarespace, are all ways of making different kinds of online sites. Doesn't have to just be e-commerce though. You can do, recipe sites, blog sites, just travel sites, anything really you want. And for the most part, those are also a drag and drop setup. But I like that Shopify is simply focused on the e-commerce aspect. Again, yes, those other ones do have an e-commerce aspect to it, but that's not what they're focused on. They're more broad, and I like stuff that's really center focused. Here's our niche, and here's what we do. And that leaves us with Square. So Square, again, is another point of sale system. They're the original one, or they're the first one that really came to my attention over the years for local small businesses. And I heard recently that they're also considering getting into the e-commerce space. Now, I don't look at that as much of a threat for Shopify as I do an opportunity for Square, because I think that this is such a big opportunity that really hasn't been explored yet, that there is enough room for two competitors right now. Now, if we start adding 3, 4, that's where it might get competitive, but I think that a little bit of competition is going to be nice in this industry, and maybe will be something to help bring back that really overpriced Shopify stock price. Now, again, with this not being a profitable company yet, there's not a whole lot of information we can really get. So like PE ratios aren't going to be a thing, dividend yields, all that. I think I mentioned that earlier in this video. But there's a few things we can look at. And really, we look at their financial statements. So one of the things that really stood out to me, as well as the other analysts from the reports I read, is they have an excellent balance sheet. They have a quick ratio, which if you saw my video, it's your current assets divided by your current liabilities, of 8.675%, which is insane. That is a lot, or that's a really high number. Generally, they say anything over 2 is good, but this means that Shopify does a good job of handling their cash, whether they're using that for this loan program that they're using to support their businesses, or if they're going to reinvest that into different kinds of infrastructure for the business, whether that be helping people with storefronts or even, I don't know, something else. I think during times like this, I actually like seeing a higher quick ratio because there's a lot of uncertainty looking forward. And at least having that much cash on the side goes to show, if nothing else, they could still pay their own employees. And any other situation, I would think that's maybe too high for a company that's not profitable. Maybe there's other things we could be doing to help them be profitable. But for right now, I like seeing companies that are stockpiling just a little extra cash, again, to help support them through times of uncertainty. One of the things that really stood out to me from their earnings call is that they had a 47% growth in revenue in the first quarter alone. And that was just one statistic that stood out to me. Really, all aspects of how they create revenue for themselves has been seeing growth. And the lowest percentage of growth I saw was 25% year over year. So really doing a great job when it comes to growing their business and increasing the revenues. It was really a lot of information though, and again, I don't want this to be a 45-minute long video, so if that's something you're interested in, I highly suggest taking a listen to their earnings call. You can listen to it right on their website through their investor relations tab, or Seeking Alpha has the transcript of the call that you can just skim through for free. But everything that they're doing is really impressive for me. Yes, they're not profitable, but I like seeing that the way that they're handling their cash, reinvesting that in the business, and always looking for new opportunities to create revenue for themselves. Also, I did see a report from Simply Wall Street. That's simplywall.st is the website. That said, I think it was a survey of about 32 analysts are anticipating an average growth in revenue of 62.49% for the next 4 to 6 years. Obviously, even though those numbers are great and they're all growing exponentially, it's really good to see though that analysts aren't anticipating this isn't going to stop even during everything going on right now, still anticipating that Shopify is going to have the ability to increase their revenue. So we've hit that point. Is this something that we're going to buy? I think you know me by now. It is something we're going to buy, but I want to say it's not something we're going to buy like we typically do. My strategy for this one is I'm going to break it down into portions of 3. Well, not 3. We're going to buy 2 shares of it, and we're going to do this over periods of like 3 different times to get to what we would normally purchase for it. Reason being is because, as I've mentioned many times, I think the stock price is really high. Now, there's no indication to me that it's gonna just burst and crash down, but there's always that possibility. So it's just something worth looking out for. And this is also too in a non-retirement account. It's a really good strategy for being a little bit more tax efficient, because if we're buying it high right now and let's say it drops to 500, we could buy it again and let's say it grows to 600. Well, when we sell out of a portion of that position, we can either have a loss, which is going to help us out on taxes, or a gain, which could negatively impact your taxes. So little tangent there, but just something worth noting that I like this strategy for companies that I'm not ready to go all in for, but get in there so if we need to sell again, we can even use this as a little bit of a tax strategy. So let's get that up on the screen, and I know the stock price has gone up like $20 since the market opened today, so want to get this done quickly so we can make sure we get the order at a reasonable price. I just feel obligated to say, because it's something I usually throw in on the end, but don't take this as financial advice. This is really for just education or really entertainment purposes only, and just showing you a long-term strategy. I see people all the time that really only make videos on day trading, so that's why I'm making something that's more of a long-term play. But again, this isn't financial advice. Everybody's situation is different. What I invest in might not be the best investment for you. So sorry, just something I felt like I needed to say, because I don't want anybody basing everything they do off of what I'm doing here. So take this all with a grain of salt. Hopefully you learned something, but don't take this as financial advice that's specific for you. With that out of the way, so as you can see on my screen here, we have Shopify. You're gonna watch that we're gonna do this at market today. I'm always double checking that now. I already put in the 2 shares here, and as you can see, that'll come out to be $1,500, give or take. So not too bad. The stock's up like $24 since market open today. A little bit of a bummer, but that's what happens when you do this in real time. So let's go ahead and preview. All right, and so that order is open. That's cool. We see it's open. Good there. And one other thing we're actually going to do is, remember last week I said that Peloton is going to be a company that, I thought that we bought it high. I said it was going to come back. Well, it has come back and then some. So we've made some money on that. What I'm going to do is I'm actually going to sell 30 shares of that. Reason being is because we have made money off it at this point in time. I want to add more cash to the account so we can have better investment opportunities down the road as well. But I still believe $37 was really high of a price to buy this at. And so if it's something that maybe it drops back in price, we could take that 30 shares we sold now and rebuy them at a lower. So I'll also do that. Might just fast forward through this, but I wanted to at least let you know that this is something. Peloton, we're selling 30 shares. Okay. And that order has been placed. So we'll just double check everything here, make sure our orders are good to go. I'll wrap up though and do that on my own. You saw me place all these trades in the past, so you know what to expect. Let me know in the comment section down below what questions you have for me, if there's any stocks you'd like for me to take a look at. If you found this video helpful, I always hate asking this, but if you don't mind just liking the video for me and maybe subscribing if you haven't already. Again, I hate asking that question, but I've learned it really does go a long way for my YouTube channel and getting my name out there, and so it just means a lot for me. But as always, you could be anywhere in the world and you're right here with me, and I really appreciate that. So thank you so much for your time today. I've taken up enough of your time though, so I will let you go ahead and enjoy the rest of your day, and I will see you next time. Quick thing though, if you're in Charlotte too and you're interested in looking at buying a house, I'm always just gonna leave my link right there at the top. It's not like a self-promotion thing, but if you're interested, have any questions, it's just a great way to get in contact with me, and I can really help you out with that. So let me know what questions you have about the home buying process as well. Thanks again, I'll see you later.